Among the newly introduced spot Bitcoin products, the BlackRock iShares Bitcoin ETF became the first to achieve $2 billion in assets under management on Friday. Well, this excludes GBTC, a closed-end fund managed by Grayscale, which had approximately $30 billion in assets under management when it was converted to a spot ETF. On Thursday, investors contributed over $170 million to IBIT, enabling the fund to buy almost 4,300 more Bitcoin, bringing the total amount of tokens held to 49,952. Early on Friday, the price of Bitcoin surged well past $40,000, pushing AUM above $2 billion. According to ETF Store President Nate, with over $2 billion in AUM, the fund currently ranks third in terms of asset gathering out of over 600 ETFs that have launched in last year. However, Garaki thinks IBIT may soon overtake IBIT as the top fund. With just less than 44,000 Bitcoin in its holdings as of Jan 25, Fidelity's Wise Origin Bitcoin Fund is probably the next fund to surpass the $2 billion milestone.
ARK Invest is betting big on spot Bitcoin exchange-traded funds. What's better way to demonstrate confidence in the product other than buying it? That's exactly the Cathy Wood investment firm has done. It has bought 1.5 million shares in ARK 21 shares Bitcoin ETF worth approximately $62.3 million. The company continued to offload shares of ProShares Bitcoin Trust ETF in the last week while accumulating its own spot Bitcoin ETF. The investment firm sold a total of 2.2 million shares of the Bitcoin Futures ETF since January 19th, worth around $42.8 million at Thursday's closing price of $19.22 from its next generation internet ETF. ARK held BITO as a short-term play, having offloaded its shares of the Grayscale Bitcoin Trust late last year in anticipation of approval of spot Bitcoin ETFs in the US, with plans to swap BITO for a spot Bitcoin ETF once the approval came. ARKW now holds $19.4 million of ARKB, constituting a 5.98% weighing of the fund's total value. Its BITO shares now number just 366,000 at a value of $7 million, a 0.46% weighing.
Devin Finzer, the Chief Executive Officer of OpenSea, has revealed that M&A opportunities are available for the non-fungible token marketplace located in New York. In light of the NFT industry's erratic fortunes, Finzer disclosed that OpenSea has been venturing into uncharted territory and publicly showing interest in acquiring and maybe being purchased. Finzer did not disclose the time frame of or interested parties, but conceding that OpenSea is open to such opportunities. Furthermore, he underlined that OpenSea did not actively seeking purchases at this time. Finzer presented a flexible approach to managing the erratic trends in the digital collectibles market, suggesting that OpenSea is prepared to welcome collaborations that support its long-term goals. The NFT marketplace hegemony has been put to the test by the dramatic drop in trade volumes that occurred in 2023. From a peak that represented 90% of the market to a mega $171 million, the marketplace has lost ground. Finzer asserted that OpenSea continues to maintain a strong hold on user safety, having weeded out fake collections to safeguard its community, even while comparatively newer platforms like Blur have swept ahead with aggressive methods and token airdrops. Well, that's all in this special segment. For more such updates, watch 3.tv or log on to our website www.3versetv.io or scan the QR code. Thank you.